Hello everyone, this is Alejandro Cremades, and today we're going to be talking about how to measure investor engagement during outreach. Before we get started, make sure that you hit that subscribe button, and this way you will never miss out on any of the videos that we roll out every week. So when you're doing fundraising, you want to know how you're performing. I mean, is your outreach being successful? Do you need improvement? Who is doing what? How do you really track things? How do you measure where you're at? So in today's video, we're going to be talking about everything to really give you a good lay of the land and to know where you can improve and how you can really optimize for success. So without further ado, let's get into it. So fundraising is a numbers game. Ultimately, the more people that you have at the top of the funnel, the more people that are at the bottom of the funnel will become investors in your business. So there's different forms that you could use to really reach out to those investors directly. Obviously, people would really advise you to use a warm introduction and ideally a founder of a portfolio company that has received an investment in the last 6 to 12 months from that investor that you want to target. But some of the methods, if you can't find a founder that can make that introduction for you, some of the methods that you can use to really directly reach out to those investors could be any of the following: email, voice calls, text messages, broadcast to a mobile phone, social media DMs. But you need to keep in mind that ultimately the investors for a living, they meet with entrepreneurs. So if you can get that warm introduction, you can literally optimize and increase your chances of getting an investment, because that social proof, that background relatedness is going to help you in getting that investor to a point of trust earlier, because trust is everything in fundraising. So again, try to find someone that you have in between to make that introduction. Now, when it comes to tracking, a really good form that you could use is LinkedIn. I mean, if you go on LinkedIn and you take a look on who has viewed my profile on that section, you're going to be able to find some of the investors that may be looking into your own profile and to see if they can perhaps review where you've worked at, what kind of capabilities or skill sets or even know-how that you have. So obviously, those that are viewing your own profile, those are going to be investors that are highly engaged and that you may want to prioritize on your list as people that you want to invest a little bit of time with. Then something else that you can measure is the email opens. So there is tools like, for example, Tout App, or maybe they're like a CRM if you're using Salesforce or whatever that is, that gives you the opportunity to know how many times your emails are being opened and by who, what kind of perhaps engagements they're doing. So if you see that an email is being opened hundreds of times, you know that that prospect is very highly motivated to take a look at your opportunity further. So those are going to be some of the leads that maybe you want to put on the bucket that you are perhaps investing a little extra time on. Complaint rates could be another one. You know, if you are putting, let's say, like a mail merge on MailChimp, where it's like a blast to a lot of people and there's a ton of unsubscribes, or maybe people even complaining, why did I receive this email? That's going to be not a good look. Also, if you're going at it, you know, with cold emails in a way that is not very, I would say, kosher or white glove approach, this could land you into certain spam filters or even blacklistings that could be catastrophic. So again, try to avoid going the mass type of approach, and always try to personalize as much as possible whatever email that you're sending out to those investors, because those investors, they're not stupid, and when they see that something is automated, they're going to go to the next email. Those are people that are highly sought after, that have tons of unread emails in their inbox, so you need to make an impression when they open your email. Click-through rate is another metric that you can track and that you can measure. So you can see who is opening your perhaps email, or how many of these people are clicking on the link that you were sharing in there that went directly to your Dropbox or to your Google Drive or to your DocSend or wherever you're hosting your pitch deck. But click-through rates are a good perhaps opportunity for you to take a look and see where they're at, whether they're high, whether they're low. Maybe there's certain tweaks that you need to do on the messaging. But again, this would allow you to understand how you're performing. Also, the pitch deck views is a great metric. So you can either embed the pitch deck on your website and track that via Google Analytics, or you can perhaps track it via maybe like the CRM system so that you can see how many people or who is clicking on that. Again, you want to know if that is increasing over the course of time. On tools like, for example, DocSend, you can see who is viewing what slide, how much time they're spending on that. But you got to be careful, because one thing that you don't want to do is to actually prompt the investor to have to give you their email in order to view anything. Because if you do that, yes, you may be able to track what kind of performance or engagement they're doing with your document, more specifically to whatever investor that is, but you're adding friction. You're adding friction for that investor to have access to the document. And fundraising, remember, is not about adding friction, it's about removing friction. So avoid prompting people to give you an email in order to have access to your documents. The next thing is the time, that they allocate to your pitch deck, and then also perhaps how many times they forwarded your pitch deck. So that goes back to what I was saying on the email open rate. So you're going to be able to see how many times they're forwarding this, how many views. That's going to be a great metric, because if you're sending it to someone and that someone is forwarding to a bunch of people, then you know that perhaps what that individual is doing is trying to get feedback and perhaps to get other people to invest with them into your opportunity. Next is the data room. There's a lot of data room tools that you can use, where you're like putting all the different folders, the important documentation, to validate your claims. And again, the diligence room is essentially where you're putting all those documents for people that have enough interest to go in and to review in detail. You can include in there the pitch deck, the financial model, whatever other documents that are necessary for them to really verify and to research and to understand the opportunity. So the amount of times that they view that, the amount of times that they go in there, who else on the team is going in there to review the materials, is going to be a good indication on where you're at and what kind of interest you're actually getting from those potential investors. Also, inbound emails is another good one, whether that is from people that you've never met. Perhaps, it's investors that are reaching out. Hey, I've seen what you're doing. I read about you on this article, or whatever that is, or whether it's on social media. It is a great way for you to know what kind of impact and what kind of footprint you have out there. So if you have a lot of people that are reaching out to you cold, that you never perhaps met, and that they've read about you and all of that stuff, that's a good thing, because those investors, you gotta understand that startup investors, they're always reviewing opportunities. They're always looking and scouting for great opportunities. And they have developed an investment thesis. And an investment thesis is essentially their interest around a certain space and the reason for that interest that has been developed over the course of time. Now, that thesis is what really prompts them to go after those types of opportunities. So if, for example, if they're interested in let's say your healthcare company or your fintech company, they're gonna go after your fintech company and maybe others, and they wanna try to understand who is gonna be a winner for them to deploy the capital. So having those inbound reach outs, whether it's in the form of an email or social media, it's a great way for you to know that you're doing something good. Then investor meetings. Out of all the interactions that you're having, that is coming from introductions, from cold perhaps emails or outreach, how many meetings are you getting? And how many of those meetings are leading to follow-up meetings? Because you need to look at this as a sales funnel. So you go with the intro, then an intro meeting, then a follow-up meeting, and there are more follow-up meetings. So as you're looking into that funnel, are you able to get a lot of people from point A to point C, or to almost to point C? You need to understand that and to see where you may be losing people so that you can perhaps optimize that funnel and make it better so that you get more people to point C, which is essentially when they wire you the money into the bank account of your business. Obviously, the term sheets received is going to be another big one. Now, the term sheet, remember, is a promise, but it's not binding, and it's a document that outlines the summary of terms that they're proposing to make the investment in your business. Now, the more term sheets that you receive, the more successful that you're obviously being in the fundraising effort. So again, that's what you're pushing for, and term sheets are a great thing and a great validation that you are perhaps, in high demand for those investors. Then when it comes to the follow-ups and the updates that you're sending, so over, like during the fundraising, maybe you're going to be sending every couple of weeks a follow-up with a new team member, a milestone, revenue, mentions on the press. How are people engaging with that? Are you getting a lot of responses? Are you getting a lot of click-through rates? See what kind of results you're generating, because that's going to tell you whether you are continuing and maintaining that interest or the interest is decreasing. And if the interest is decreasing based on the responses that you're getting, you need to understand why that may be the case and try to turn it around and to continue pushing that excitement in order to get people to end up investing in your business. So ultimately, it really comes down to data. You need to think about it from a data approach to really understand what each one of those metrics, how they're performing, and how you can do a better job to increase your chances of getting things to the finish line. So hit a like on this video, leave a comment and let me know what you're up to, and also don't forget to subscribe to our channel because we're rolling out videos every week that you may find also interesting. So if you're raising money, also send me an email at alejandro@pantheraadvisors.com. I would love to help you out with your capital raising efforts. Thank you so much for watching.